Doing Monday morning, August 3rd. Good morning. Good morning. Hope you all had a great weekend. Hope you got out and enjoyed it a little bit. Had some good weather wherever you are. Hope if you're in Florida or wherever you are on the East Coast that the hurricane or the tropical storm. Hey, everybody. Thanks for the knocks. Thanks for the knocks. Knock, knock. So hope that didn't get in the way of anybody and hasn't caused any damage, etc. So we got a kind of boring evening or morning this morning. Everybody should just go back to bed, get a little more sleep, I think. If you look away from a couple of companies here, obviously Marathon being one of them with the sale of Speedway, and that's kind of one of those double asterisks on there. Earnings are kind of slow this morning. Clorox, though, obviously we're going to take a look at a chart of Clorox here because that is one of these zero volatility going from your bottom left to the top right of the screen. Smart to get out before the hurricane. I like that move. So many people try to stick around, and I've been in one before and don't know. And I even just caught the edge of it. Don't know why people decide to ride that stuff out. Did I see Akron? So you go from Florida to Akron? That's definitely a little bit safer. I don't think you have to worry about much on the lake up in Akron there, up in that area though. Anyhow, let's jump into the slides here so we can keep things going. But too late to go back to sleep. You know what? It will, Paul. I had an interesting conversation with Nicole Pedalides on TD Ameritrade's network, and she actually asked me specifically about the stock split and whether or not we're going to see Apple go up. And yes, we absolutely will. I think people should think about this Apple. And this is one of those questions, just to get onto an education thing for just a second. Stock splits used to mean a lot more because it would bring a stock down into a category of pricing where a lot more investors would be attracted to it. It represented a value move, if you will, even though it generates zero value. There's one of those situations where a stock goes from 100. Procter & Gamble used to go 100 and they'd split to 50 and that was it. It was just a common rule. And it's because people look at it and say, well, it's at 50, it'll go back to 100. It's 50, it'll go back to 100. Now you've got all these stocks that trade up in thousands. The biggest difference is anybody can buy them. My kids can buy them with, $30 or $100. A partial share of Apple. So the psychology of the stock split and turning it into a value has become less of a thing that's going to drive the price higher. I think Apple's earnings report is going to drive the price higher before the split. Split's coming obviously very quickly here. And if you look at it, many of the bears rest in peace. Absolutely. And these are the Tesla bears too, and all those others that have been out there. You know what? Apple did a great job on their report. They beat their phone sales numbers by 20%. They got their services up there and going. When we talked about it last week on Thursday, I kind of said, you know what? I think that Apple's one of them. And my favorite was Amazon, but man, Apple is just looking like it's going to run a marathon here. I think Amazon, and they're interviewing Steve Ballmer right now on CNBC, and it's a real interesting article or interview to watch. And they just asked him straight up, if you were still running Microsoft, who would you be more afraid of out of the big four? And he said Amazon, and it's because of AWS and because of everything else that they're doing. And I think that's true. And the data that they've got, long run, they're going to do great. Apple, though, if you look at Apple right now, that is one stock that is just not to be messed with. And if you get an opportunity to grab it, when we do see a pullback, and we will see a pullback outside of that split, but if you do see a pullback, you know what? Right now, I'd got to say, if you'd be lucky to be buying the stock at 400 because everybody's going to be trying to buy a dip here. But you look around, maybe that you gapped up on your open at 410 or so, 415. I think 410 is a place where you look at it and you say, you know what, this is something I'm going to hold for a while. Remember, this is one of those blue chip stocks now. Apple, Microsoft, Amazon even. I won't go so far with Tesla. I won't go that far with Google because I don't think it's a tech blue chip yet. But even a company, though it's been beaten around a little bit, Intel is still going to remain one of those because not only are they going to give you growth over time, and Intel will come back one day. It's just not now. AMD is a play there. I'm going to give you another semiconductor play here in just a few minutes on an earnings report this afternoon. But I think that you have to look at those companies. And those are the blue chips that, like when my dad bought GE and bought GM and bought Ford and just held on to them for years and took the dividend. That's what you do with these companies. My dad was in the steel industry. Speaking of the steel industry, U.S. Steel cliffs took some hard tumbles last week on earnings-related news. Let's look at this right now. 545. I'm glad you took the time to join us. I hope we're giving you enough value for 545. This is U.S. Steel. I'm going off charts now. I'm just this isn't on the slides or anything. Just as I was doing my weekend review, this stock was starting to go dead zombie on me, flatline on me, whatever I'm going to call these flatliners with the 20-day, 50-day. And now you got a situation where it looks like U.S. Steel and Cleveland Cliffs, CLF, the steel makers taking a knock here. Cleveland Cliff break through that 5 level, and you've got a situation where they start to head back down towards that 4. So, and then the other one I wanted to follow up everybody up on was Ford. Ford came out with their numbers obviously last week. We talked about it with the target of $6. Took a nice hit on Friday, traded down to $6.50, bounced off that 20-day. $6 is in Ford's future here. $6 is in Ford's future. They're 1 day into the decline. GM is 3 days into theirs, and you can see what's happening. GM's just going away. Guys, these companies coming out and announcing that they're going to have an electric Hummer. Really, I hate to be insensitive, but who cares? I don't think many people want to be driving around the Hummer. There's still a ways behind in the EV game. You've got, other players there, whether it's Workhorse this weekend, right up talking about how they're going to start building pickup trucks. That goes straight in the face of Ford. Are they going to be able to do the production? No. But if they come out with a cool model, the people are going to start to wait. They're going to start to look at this and say, okay, where can we get these produced? So I think an interesting thing going on with Ford and GM right now. It's a situation where these companies really haven't been able to pull themselves out of the spiral. You could still go out and get the 0% financing. Auto sales coming out earlier this morning looked weak again. Let's finally get to the slides. What am I going to do? A rundown of the pre-market news and moves. The big 4, this is from Friday, under the fold earnings. This is this morning's future higher. We're about 140 points higher on the Dow right now. WTI futures slipping, and there's a pun intended there, all over the place. Silver and gold. Silver showing more of a pullback. Gold was down earlier this morning. Gold's now trading just a little bit higher. I think we still got some froth coming off of that trade here right now. We'll look at both those charts because I want to look at them every day with you right now, because those are some good trades when we do get that pullback. And earnings season's still very much in play. I just pulled it up. 172 companies on my list that I'm looking at right now for earnings. 172 over the next 5 days. You're going to start to see some of the smaller companies. We get away from the bigger cap tech. We start to see companies like Clorox this morning, who did a good job. You start to see companies that are in the smaller area of the semiconductor and smaller tech companies that are going to announce. A lot of biotech coming out this week as well. So a lot of earnings trades that we're still going to see. Let's take a look at what's going on this morning. Clorox beats by 56 cents. Beats on revenues, guides 21 higher, above expectations. Stock trading is trading higher in pre-market. Marathon, MPC trade beats by 43 cents, misses on revenue. There's a double asterisk after that. They're selling their speedways. They're getting rid of the Speedway station, selling that off to the holding company that owns 7-Eleven. So they're going to capitalize. They're freeing up equity. They're freeing up. This is a capitalization moment for shareholders. Stock was trading up 8% when I took a look at it. McKesson beats by 38 cents. Beats on revenue. We've got a healthcare related company that's coming out with some good news. EPS above consensus is what they're selling us. And then Tyson. The only reason I'm bringing this up is this is a zero volatility stock that is just not exciting at all. With all the things that happened with the pandemic and have locked up some of those processors, I don't think this is attractive. Clorox. When I go straight to my notes, my yellow pad here, when I go straight to the legal pad and see what I was writing down this morning when I was looking at all these. Clorox at 230, love it. Absolutely love it as a buy. Don't know if it pulls back. This is one of those that I think you have to start looking at the Jan, and this is a stock worthy of being in a portfolio as an investment. If you go back to that question that ZB asked last week, difference between an investment and a trade. And I'm simplifying it when I say that was the question, but I'm simplifying it for our purposes here. Clorox is an investment, just as Procter & Gamble is an investment. And you're either looking at buying the shares at $230, which I don't know if you're going to get a chance to do. You might. Or you're looking at a situation where you go out and do a stock substitute and you use some leaps. January 21 250 is what I look at when I look at that stock substitute. The January 21, so the January 2021 250 strike, you have to get a price after the market opens right now. But that is exactly where I think you start to look on a stock like Clorox. It's one that you hold. You're not going to get a huge bump out of it because of any developments in their business, etc. This is going to continue to run this zero volatility marathon simply until we have a vaccine, and then after the vaccine has actually been disseminated. So after we've all of us that want it will have it. So because we're still buying up the Clorox wipes and bottles of Clorox, I still go to Kroger's and see empty shelves where Clorox products are or where they're supposed to be, and they're still rationing them. Clorox is one of those you keep on the radar right now, or you keep in the portfolio. Again, that January 21 $250 strike is the way I play it in my personal portfolio. MPC I mentioned. This isn't a trade right now so much as I just wanted to show you the chart. The stock's going to open up probably around $40, $42, $43 right now. It is trading much higher, obviously, off of the news that you are going to see the company capitalize on the sale of Speedway. So it's a simple unlocking of equity right now. The stock is going to trade much higher off of that. And that is a moment. It's a monetization moment is what I refer to them as. It is not something that's going to provide an annuity of cash flow to the company. It's going to give you some the shareholders, that monetization, and then it's done. MPC starts to trade off of its own without Speedway at that point, and then we'll see where it goes from there. You can't trade one of these moves because, first of all, anything can happen between now and when they expect to close the deal. So you look at it from the perspective of that monetization can change or it completely go away. So MPC right now, it's one that you watch. I needed to put it up there because that's the bigger of the news today. When we look at the takeaways from today, it's a Monday morning earnings news yawn. I mean, the stimulus. Let's talk about stimulus for a second. We went from last week on Wednesday, where we thought we were going to have a deal, and everybody's going to get it through because the recess is coming and both sides are working hard, to no, we're kind of disagreeing on what's going to happen with this this weekly check. The $600 is not going to be $600. It's going to be $200. And it was also over liability and all $1,200 check. Now it's getting into more of this. This is, again, how the sausage is made, but I think this sausage is going a little bit bad right now. I'm not sure about the ingredients that are being put into it. Bottom line is I think the market is basically going to start to force a hand here of the Republicans, because if we start to see some additional volatility because a deal is not getting done, because Mr. Secretary Mnuchin continues to come down from the hill and scratching his head saying, yeah, we don't have this one yet, or we don't have this one yet, you're going to start to see the market act a little more differently because they're looking for that stimulus to do exactly that, stimulate the market, especially a lot of the consumer discretionaries, people getting ready to go to school, maybe, and also the retail areas. And if you look at it, the situation that you've got with companies like Camping World, I mean, that's a great one. Even the Ford and GM, people are using that stimulus to go out and buy things like that. So if we don't get that stimulus or an indication of where that's going to be, a lot of uncertainty starts to unfold on this market beyond whether or not we're going to see kids go to school or whether you're going to see the NFL play, which I really hope that we do. I don't know if anybody watched the NFL this week or the NHL, but it was amazing. They did an awesome job. The NHL did a great job for their fans. The bubble's working for the NBA. They got to figure out how to get the NFL in a bubble so that we can have that season. And I think the only way that happens, I'll go off on my little personal tangent here, is if NCAA sports, you see some really big teams that don't play, and all of a sudden you can have 4 different sites for the NFL to play where they put the players up in dorms. The only problem is they got to stay there for 5 months. But Anyhow, what? No, go Pens, go Pens, go Pens, not the Wild. Go Pens, and we need to win tonight. So let's go back to the notes here so I don't take too much longer. So what are we going to watch here to take away? You know, the earnings this week. They're still going to pack a punch. Let's look at one of the calls that I'm looking at. I like this trade. Semiconductors have been strong. Semiconductors have been giving us good reports. And we got KLA coming up after the close. Love the technical setup here with the bounce off the 50-day moving average. The stock pulled back from $210 to $190. So about 8%, 9% or so that we saw the stock come back. KLA did that within the last 8 trading sessions and then really kind of fortified that support at the 50-day, just knocking on it a couple times. Knocking on it a few times, coming back up to the 20-day, giving it a little pause and waiting and reflecting there on Friday with a close right at 200. You also know that I love that there's that $200 price level. You look back at the earnings and the last time they reported, we saw something similar. We tested the 50-day, and I'm not saying that this tells you the stock's ready to take off. We tested the 50-day, and then you had earnings right when we were trading at the 20-day. And then the stock went bonkers. It was May 5th was the last earnings announcement for KLA Telecor. If you look at the numbers of what we should be possibly expecting from just looking at the trends here are their trends over the last 2 years. You know, we've seen revenue, which is on the right-hand side, remain strong for KLA. Even though we had last quarter was a little bit weaker, 29.8 year over year compared to 35%. He had an earnings surprise 11 cents compared to the 8 cents period before. No misses here is one of the things I like about KLA. It's tucked away enough in the semiconductor sector that it's not an AMD, and it's not, you know, somebody that everybody's got to punch on and say, hey, NVIDIA. But KLA is one of those companies that gives you that constant performance. It is trading higher right now, ahead of the market, and it's going to put it above that $200 level. And the 200-day moving average, or the 20-day moving average right now, 220 sitting there together have got me. The 200-day is trading down at 170. When I look at the company, you've seen short interest that's been going up just a little bit. So there's a little bit of distrust that we can have a number that's really going to knock the cover off the ball. If it knocks the cover off the ball. And I say if because those of you that are trading with me with XPO know that XPO looked like it was going to knock the cover off the ball, and they didn't. By the way, side note on that, this morning, they actually got an upgrade in their price because one of the analysts brought up the fact that bringing up the LTL differences and all of their segments right now is kind of revisiting the idea of what is the value of the company. Got a nice upgrade to the price, so hopefully we'll see a little bit of a punch through on that as I showed you with the data on Friday. But back to KLA, I like playing this right there at the money with the 200s. Looking at the September options, though, not trying to, you know, I'll use the hurricane pun just because I'm not trying to thread a needle in a hurricane by playing the weekly options or even the front month. Go out a little bit of time. Give yourself some time on this one. Semiconductors have been the lead in this market right now. So you give yourself a little bit of time for this one to play out, but right at the money or even the 205 start to look they're going to be a little expensive. You're going to pay a little more when it opens up this morning, but that premium, and you're going to lose some of that premium right after the announcement this afternoon. But the move right now in KLA, it's about a 6% move on average when I looked at the numbers, 6% move the day after their earnings. You're right. It is up 4% right now. Earnings after, you're going to get the 6% move on top of that is what history tells you. Next day, let's keep it moving here. Trading the headlines. Let's jump into a few headlines. And you guys can throw some questions. Make sure we're putting some questions up in the Q&A area because I'd love to have a few. And look at that. I've got some. I can check in there and see them. All right. Microsoft, obviously. The news this weekend. On Friday, we thought TikTok was going to get closed. All the 14-year-old boys and girls, and even some of us adults, were kind of going, oh, no, you can't turn that off. It's kind of funny to watch. But Microsoft comes in, and Nadia puts in a call to the White House and says, hey, we really are interested. White House gives them 45 days and says, get a deal done to buy it, bring it here, turn it into something more secure, and you can move forward. Microsoft's trading up almost 3% because of that. And is this a tradable? Absolutely. Microsoft getting more into the side, if you will, of the social networking here. We're going to start to see, I think, a little more of this from Microsoft, where they start to get away from just your Office and your Azure and really start to. Anybody remember the Zune? When they tried to rip off Apple with the Zune, I actually bought one. It was the worst thing in the world. Right now, what they're looking to do is go in and buy something that's working and get into that. I think it's a good move. I think it's solid for Microsoft. When they had Ballmer on a few moments ago, he said this was a company that he would have liked to buy. I think that's a great, backing to have. Company breaks back above its 20-day moving average. The stock is going to $240, $250. I like Microsoft. It is one of those blue chips that you have to have in your portfolio, the blue chip technology companies that should be in your portfolio. So other news that we're looking at, Penn. So Penn National Gaming. This is big because this also has a tie to sports. When we're looking at the sporting situation, you've got the NBA and the NHL that now have 1 week or 1 weekend, and they'll continue to play. The NHL picks it right up today. This is like March Madness for hockey fans and for NBA fans. But Penn National's got 70% of their properties open, of their 41 properties. I like the fact that the 20 and the 50-day, we actually have been looking at DraftKings with the night trader system because it's a similar play here on these sports coming back and getting the activity. I got the thumbs up, and not that this matters, but I did get the thumbs up, the social thumbs up, the walk down Main Street thumb up from my younger son this weekend when we were talking about DraftKings, because he was actually laying it on me. This is the one site that's going to come back. FanDuel, DraftKings, they're going to come back more than the actual gambling sites. But Penn National Gambling has been playing around with the top here at $38, $40. I think with the comeback of some of the sports and their book action, that 20 and that 50-day, if you're looking for a trade that swings on this activity, you're going to see a bounce off the 32 as some questions still come around, linger around the NFL and what's going to happen there. And a couple more players dropped out this weekend. Actually, they had a baseball player, I forget who he was, I forget what team he was, walked out of the hotel yesterday and just left and said that he was opting out for the rest of the season. That it was somebody from the Flyers, or not the Flyers, but the Phillies, I think, and said he was just out, just moved. He was out. You have to worry about that effect. And if you look at the NFL, how many players are going to start opting out beyond what's already there? 7 of New England's players have already not opted out. And I'm giving you news outside of the stock, but it comes back to Penn and it comes back to DraftKings. If we start to see more of these, then that's going to be a situation that could put pressure on the stocks. Personally, as a Steelers fan, I'm glad to see 2 of their secondary players, or stronger secondary players, New England's secondary players, opting out, because it means that Big Ben can start throwing the ball all over their secondary. Etsy, seeing some analyst activity. They got earnings coming up this week too. Why does this matter to you? It's a great play, breaking above that 115. Short interest on Etsy's been high. This stock is going to get another boost from its earnings. Pinterest gave it the boost on Friday. People looked at it and said, oh my gosh, Pinterest is, done so well. The stock goes up 26%. This is a stock we've been watching. When we look at the non-social socials, is what I refer to them as, and they're lower risk. They don't have to worry about the president or anybody else saying, why did you filter my tweet or my entry into Facebook, my video? Etsy, it's selling stuff online. This is another eBay story. This is another Square story. This is the online working from home. Etsy right now, I like with the target of 140 right now. I think the earnings probably gets it halfway there later this week. One to watch. You play it, and you can play the stock at 115. It's going to be trading a little higher today after a 5% day on Friday. If we get a little pullback to 115, you like that. You also go a little bit out of the money with the September option on this, is what I've got written on the big yellow sheet of paper here. You go out with the September 120 is what I look at, and you let this thing play its way out. This is also one of the stocks that I look at as a potential for a year end, because if you think of it, one of the big drivers behind this is the fact that we've had the coronavirus has just brought Etsy to life as a true retail space. So I think with the continued fears around that and people not wanting to go out to the stores that much, Etsy continues to have a fundamental driver. Is that Molson Tap we're looking at? Because I'll definitely take a look at that, and we can look at some Boston Brewing as well. Let's get into one of the things, and I'm going to get into charts right now. One of the things I want to cover on Wednesday, so I'm giving you a little bit of a teaser. Biotech ETFs versus individual names. This has become more and more important. A lot of people, when you look at the biotech sector, have been actually going in and saying, you know what, I can buy anything in this sector and it's going to go up. And as a result, we've got a lot of speculative money in the biotech sector. Some of this is the Robin Hood effect. When you look at the I'd say 40 to 50% of them on a daily basis are biotech companies, and usually they're penny stocks or they're dollar stocks. But to some extent, they're also some of the larger dollar stocks, some of the larger cap stocks. There's a problem here because there's a lot of speculation going on, and it comes back to COVID and whether or not we're going to see a slowdown in the video. There's a problem because it goes back to that speculation, and speculation drives market higher, and eventually you need confirmation. That's what earnings do. That's what also phase 3 announcements do. So when I look at right now the biotech sector, I see a lot of volume coming in on the XBI and the IBB, which are the two ETFs. But they are two sectors that have two different stories on each side. So it's not easy enough normally. And when I was on TD Ameritrade's network on Friday, I told Nicole that I think you can go and buy the NASDAQ 100 ETF, the QQQ shares, because 35% of that ETF is made up of those 4 companies that announced their earnings. Why buy Apple if I can buy Apple, Google, and Google maybe you didn't want to buy on Friday, but Amazon and Facebook all in one share? I got 35% of the movement. I get away from a little bit of the headline risk. And you know what? I get to pick up NVIDIA and some other companies as well. And American Airlines is in there, but it's such a small weighting that it's not going to make a difference. That does not stand true with the biotechs. You can't simply go and buy that biotech ETF and expect to see the performance that you're going to see from Moderna, that you're going to see from any of these other biotech companies that are in the news right now. Right here is the XBI, which has come back from a 120 print down to a 110 print and challenging its 50-day moving average over the last couple of days here. Then you look at a company like Vertex Pharmaceuticals that has done this, and it's a heavy weighting in the XBI, and you can see why the XBI is challenged that. But in the same ETF, you've got companies like Moderna that are pulling the ETF up right now. So what I'm going to do on Wednesday is break it up and give you 3 on the top, 3 on the bottom. They're the 3 you can short. They're the 3 you can go long right now. Obviously, you guys know I like the AstraZeneca Moderna play into the year end, looking at January options. I'm also going to give you 3 of these smaller ones that are making new highs that aren't necessarily just a COVID-19 vaccine company. Remember, there are other things out there that people are ailing from that these companies have phase 3 trials going for. Those are the companies we can focus on, because the headline risk for Moderna, or the headline risk for whether it's positive or negative for AstraZeneca, is exactly that. You need to diversify along those. With that, let's take a couple minutes and go through some charts, and I'll bring up that Moderna because we've seen it pulling back here, and a lot of weird headlines have been crossing around. You know, that this is going to be, it's going to be the Sharks and the Jets here soon between Moderna and the Oxford study. I read an interesting article on the front page of the New York Times on a company in India that is actually already using some of the results from the Oxford studies, one of the samples from the Oxford studies, to produce a vaccine based on just the speculation that this vaccine could work. And if it works, they are going to be, the gentleman that owns it says, and it's a privately owned company, says that he's been getting calls from heads of state already that he will not name. So if it works, this guy is going to get a payoff that's bigger than any lottery ticket you can imagine, because he is getting out in front right now with the manufacturing and basically putting a vote in that the Oxford study, the Oxford results are going to come through. That's a good one for AstraZeneca, obviously, if somebody's already making these doses. Moderna, right now, $70 is the price that I'm eyeing it on. You know, I like to look at it from a limit perspective. Limit perspective at $70, you get in, you get the $67 50-day moving average below you. You get it back above 80 at that point, and you're looking at it with the stop loss of maybe 3 to 5% or so. It gets up to 90, or if we have one of these days where the stock shoots up 26, 27%, you tighten that thing up to 3%, and you go from there. So let's look at another one that the VIX we always cover. I don't have the chart of the VIX in the slideshow earlier today. The CBOE Volatility Index closed the day at 2244. Unbelievable, because we've seen the 25 level acting. The 20 comes into play here, and we've got a concern here if you're long volatility, as I am. Seasonality. And I'm getting tired of saying seasonality, because if you look at it, one of the things that I pointed out to some people here is that Bank of America, these are the financials. If you look at the financials, this is part of the reason why the VIX is able to go lower. They are one of the sectors that weighs heavily into that group because they're one of the heavier in the S&P 500. That is zero volatility, which factors into the VIX. Citigroup, you can pull up all the financials. You can pull up the regionals and start to see they've just gone to sleep. Somebody brought up Carnival Cruise Line earlier in the string here. And if you look at Carnival Cruise Line, it's gone to sleep. Royal Caribbean, gone to sleep. All those things that were exciting to us a couple months ago have gone to sleep. Now, of course, they're going to see their earnings coming out with a couple of these cruise line companies this week. So we're going to see what happens when they tell us what their actual burn rate is and what it's going to cost for them to get their boats back up into operational order, whenever they can get them into operational order. But back to the question of the VIX. VIX dips down, has an actual low of 2217, and then pops back up again. Watch this confluence, and let me spread that out. This confluence of really the 200-day and the 20-day and then the 50, we get to see if that breaks higher, the VIX go right through that 50, which it got, you can see, had some trouble here. That's how the volatility plays out for the market right now. Otherwise, I think we just continue to troll away. I have not seen the news on the Moderna executives dropping. That's obviously something that you can look up very easily because they have to report it. I would, quite frankly, I would be selling some of that. That's like whenever you used to see Tim Cook or somebody sell Apple shares, and they'd say, well, he's selling Apple shares. Well, yeah, he's selling Apple shares because it's up X. And in some cases, he was giving money away. Let's look at eBay real quickly. I'm trying to go up the list, and then I'll come back down. And I need to hit a couple of the questions. We got about 5 minutes left. eBay, I like to pull back below that 20-day moving average. Long eBay right now, $56. You take that out with the 20-day, and this stock goes up to 65. Love the way we came into the earnings announcement. This was just, you know what? The eBay is just one of those great, again, Etsy style, stay-at-home stock. Everybody wrote it off. Obviously, you still have some ties with PayPal there, but everybody had written eBay off until we had the pandemic come out. Now everybody is looking at this stock as one of those that you can still go out and buy because we're selling stuff online. We absolutely are. Mercado Libre along with Amazon. These charts are going to look the same for so long it's not going to be funny. I like the chart with Amazon as well. Obviously, I told you that's the #1 in my book right now. I dig the pullback because it's telling us everybody's not getting excited about it. You've got so many different numbers out there for Amazon, whether it's 3,400, whether it's 3,500. I don't think we hit 3,500 easy. Take it easy, Jerry. Enjoy the trader's market, my friend. Make some moolah. In this case, look at you. Right now, you're just going to see it bounce around a little bit. You've got more analyst activity coming in on Amazon. Expect to see that coming up. I did say I was going to look at Molson Coors here. Tap. This is not in the beer section right now, in the beer area, and this would be a Staples company. We would consider this a Staples. Not doing as well as we would expect. If you look out there, you can look at, obviously, you can look at Boston Beer Company, which has been doing a much better job in terms of the beer market and sticking in that, you know, the strong end of it. Let's face it. Molson Coors has been out there buying craft beer companies and trying to make themselves grow beyond, their brands that they have. And in this particular case, I think it's better when you've got a Boston Beer Company or somebody like that. We've not seen the larger companies that were, and typically when we hit recessionary times, you see Anheuser-Busch, and let's go look at another one besides Molson Coors. You see these companies take off, and it's not happened. It's really not happened yet at all. I think it's because we're all stuck on, quite frankly, paying $6 for a beer. And if you pay $4 for a Sam Adams, you're getting a great deal. I stay away from Coors Molson. I'll get it right here in a second. And I prefer a Boston beer over that. Didn't understand if you believe the VIX will pop back up or not. Yes, I do believe it'll pop back up. Financials and everybody are going to get some activity, especially when we see something that happens with the package. Right now, I think this market volatility dies because you've got, first of all, some good earnings that have gotten behind us, but we've also got to look forward to what's going to happen with this financial stimulus package. We're going to get a little bit of an unleashing of a volatility storm at some point here. That 15-minute nap is what I talked about a couple days ago is exactly what this market needs, and that comes when we start to see the volatility start to rise. I just click over the question, so I'm not going to be able to see you in the chat for a second. Guy, thoughts on the VIX? Just did that. Tap, a good dividend play. Don't believe so. AMJ, BBY. We've got quite a few. You know what? Let's look at one of them, because Zoom looking to bring a lot of the operations out of China was the news over the weekend. Like Zoom always when it hits the 50-day, and this is why I go to Zoom. This is one of those stock charts I always put up in front of you when the stock is nearing its 50-day. Now, do I like the way it got to the 50-day is the question. And the reason I say that is when you see this, the 20-day has been going up nicely, and now you got a flattening of the 20-day here. You could get a little bit of a squeeze play here on Zoom, and I think that puts a little more pressure on the 50-day. A break below it and hits 220. I think you see a lot of buyers. There's a consolidation here. You can see that happened back in June. I was looking at this chart myself this weekend. The 50-day is where it starts to look attractive at 235. Down at 220, I think the stock looks good, and you put that 5% trailing stop in, and it gets traded up to 280 again, up to those highs, and trailing stop at that point. Trailing stop at that point. You know what? The sectors, let's look at, when you look at BBY, and you have to start talking about retail here. XRT and BBY has been one of the big drivers in the XRT's activity. We've seen a lot of companies, Buckle, American Eagle, that have been doing poorly, and then you see companies like Bed Bath & Beyond that have done, they do poorly and then they do better. But Best Buy has continued to be a good play in this area simply because they still have their online game, and they've had their online game for a while. The stores that have their online game, and Lord and Abbott announced that they're filing for bankruptcy this weekend. So there goes, a couple of the other retailers that are in the mall, including Men's Warehouse. Retailers are dropping off like flies right now. And I think the next move is to decide whether or not they're going to be Chapter 13 or Chapter 11, whether they're going away or whether they're going to try to restructure. But if you look at it, Best Buy has been one of the very few in the sector that's been able to continue it, and it's because it does have that strong game. You can get down into the smaller retailer names that you and I have been talking about for some time. Ollie's got a similar chart here. The fact that your leaders are leveling off in the XRT, I don't like. I think that comes back to people talking about the possibility of not going back to school. 3 more schools colleges announced this weekend that they're not going to have on-campus classes for the first quarter of the school year this year. That's going to bring more and more problems. And I can tell you, Gordon Gee at at WVU is right now considering dropping. It sounds like they're considering. They keep pushing back and adding more online classes. That becomes an issue for a lot of the retailers because they're still looking for this to actually happen and get some jeans and stuff off of the shelves here. So would I get into a Microsoft at the price it's popped with a bit of the TikTok rumors, or just get in now? You know what, Jordan? I usually do not like to buy into any of these as they pop on news today. 2% you're going to get at least out of Microsoft. Takes it above that 20-day moving average. It's almost a sense of I don't want to buy it at the point where the price went up. So typically I'm going to look at somewhere around the 205, 207 level on Microsoft. I love this consolidation across the 200-day moving average. Again, Microsoft is one of the technology blue chips you have to have in the portfolio. You can buy it in dollar cost average in if you like as well. Let's take a look at a couple of the Chinese stocks right now, because obviously we're still seeing a little rhetoric between the two. Baidu being one of those. 20-day or the 200-day and the 50-day right now playing out on Baidu. I've not liked the volatility on this stock. You should have considerable support at 115 from that 200-day moving average, and you can see how we launched off of that last time we tested it. If we keep knocking on this moving average the way we are and keep getting sandwiched between that, you're going to see Baidu take a dip down, and we're going to see a 105 print on it. Alibaba, also one of the companies that's suffering a little bit because of the talk between China right now and the United States and what's really going to happen. And everybody's trying to figure out what the corn purchases mean and if China's starting to actually live up to their end of the phase one deal. You notice the pennant probably, if you look at it the way I do, 270, 260, 250, and then on the downside you got 230, 240, 250. Puts 250 in play heavily right now with its 20-day moving average. I think you probably get a trip down to 230 right now, and at 230 Alibaba starts to look a little bit attractive at those levels right now. Even though you have some tensions between the United States and China, I think that's the way that pennant formation starts to play out, because you're getting a little more pressure. If you look down here, your volume is going up on your selling. So don't like it when you see that volume going up on the selling. It tells you that there are more, it's a crowded trade as well. A lot of people in Alibaba. Is there a way to play ADT after announcing their new partnership with Google? No, there is not at this point. You let it settle down. Anything that announces, this is almost like the Marathon deal. When they announce that deal, you get that initial pop, whether it's a pop for the company that's being purchased or the pop for the company that's selling it. In this case, it's Marathon for the selling, ADT for the case of being in that alliance with Google. So now it moves into the phase of whether it's really going to happen, how it's going to happen, and all of that. And it's not as if it's an actual M&A activity where you see it just go flatline. You're still going to see the two stocks trade, but understand that premium is out. Some people will actually start to throw out some puts on there that'll, if they own the stock, you'll protect it with the put, because if the deal falls through, then the ADT comes back down again. But quite frankly, that's not something that you play. That's just an insurance policy. Market's opening, guys. So we're going to jump in here. I got to let you go. We've been at it 45 minutes. We'll see how everything opens up. XPO is a buy. XPO is a buy. I spent a lot of time over the weekend looking at the stock. This is coming back up 2.1% this morning. That's a good start to get it back up above the 200-day moving average. History tells us we should see a nice move from XPO here, and we got the 50 and the 20-day just below it. So XPO is looking good right now. Guys, always appreciate the time with you. You know how much I like this. I'll see my night trader people at 11 o'clock. Everybody else from Markets Open, I'll see you guys on Wednesday, and we're going to talk about 3 biotechs up in the top and the bottom, 3 and 3, just like ESPN with the 3 and 30. No. We'll do it in less than 30. We'll do 3 and 3. I'll see you guys at 11, and then I'll see everybody else Wednesday morning. Have a great trading day. I wish you the best trading success. Have a good week as well. Bye-bye.